Welcome to Earnings Recap. Today, we're covering Visa's fiscal second quarter 2025 earnings report.
That's right. Visa, big player in digital payments. They dropped their Q2 results on April 29th.
And our goal here is pretty straightforward. Cut through the noise, pull out the key financial bits from their official release and presentation.
Exactly. Make it easy for you, the busy individual investor, to get the important takeaways without digging through, pages and pages.
Okay, let's jump right in. Top line first, how did Visa do on revenue?
So for their second quarter, fiscal 25, net revenue came in at $9.6 billion.
Okay, $9.6 billion. How does that stack up against last year?
It's up 9% compared to the same quarter last year, which is, pretty solid.
9%. And I often hear about constant dollar figures. Does that change the picture much?
It does, actually. If you strip out the currency fluctuations, look at it on a constant dollar basis, the net revenue growth was stronger at 11%.
Ah, okay. So 11% underlying growth. What's pushing that?
Well, the report points to generally healthy trends across their main business lines.
Like payment volumes.
Exactly. Payments volume was up. Cross-border volume, that's people spending internationally, that was also strong. And just the sheer number of transactions they processed went up too.
Makes sense.
Yeah, and the CEO, Ryan McInerney, he actually commented on this. He said consumer spending held up pretty well, even with, all the macroeconomic uncertainty floating around.
So resilience is the word there.
Seems to be. He mentioned their strategy across consumer payments, commercial, money movement, value-added services. Basically saying their diversified model is working.
Interesting. Can we break down that revenue a bit more? Where is it coming from specifically?
Sure. So the biggest chunk is usually service revenue. That was $4.4 billion this quarter.
Yeah.
Up 9% year over year.
And that's tied to spending from?
Good point. It's recognized based on the prior quarter's payments volume.
Yeah.
So Q1 spending drives Q2 service revenue.
Got it. What else?
Then you have data processing revenue. That's fees for authorizing and settling the transactions. That hit $4.7 billion, up 10%.
Okay.
International transaction revenue, that cross-border stuff again brought in $3.3 billion, also up 10%.
So consistent growth across those core areas.
Pretty much. And then there's other revenue. It's smaller, $937 million, but it saw the biggest jump, 24% year over year.
Yeah.
Includes things like licensing fees.
24% growth there is definitely eye-catching. Worth keeping an eye on.
Absolutely. Could signal some diversification or maybe success in newer initiatives.
Now, I noticed something called client incentives in the breakdown. Sounds like a cost, but it's listed with revenue.
Yeah, it's what they call a contra revenue item. Basically, Visa pays incentives to its clients' banks, merchants, to encourage them to use Visa cards and the network.
Ah, like strategic partnerships or volume deals.
Exactly. Think of it as, an investment in keeping their network strong and growing market share. It reduces the net revenue figure.
And how much was that this quarter?
It was significant. $3.7 billion. And that's up 15% compared to last year.
15% increase? That's quite a jump. What does that tell us?
It could suggest maybe a more competitive landscape. They might need to offer sweeter deals to keep partners happy or attract new ones. It's definitely something investors watch, how those incentives trend over time and impact margins.
Right, a key metric to track. Okay, so we have the revenue picture minus those incentives. Let's talk bottom line net income and earnings per share, EPS.
Okay, and here we need to be clear about GAAP versus non-GAAP.
The standard accounting versus the adjusted figures?
Precisely. So under GAAP, the standard rules net income was $4.6 billion. Now, that's actually down 2% from last year.
Down 2%. But revenue was up strongly. What happened?
The big item was a litigation provision. Almost $1 billion, $992 million, specifically related to that interchange MDL case. The ongoing legal battle over swipe fees.
Ah, okay. That would definitely put a dent in the GAAP number.
It did. There are also some smaller hits from losses on equity investments and amortization of intangibles from acquisitions. But the litigation was the main thing.
So that explains the dip in GAAP net income. What about GAAP EPS?
GAAP EPS came in at $2.32 per share. That was actually up 1% year over year, likely due to share count reduction from buybacks.
Okay, a slight increase despite the net income dip. Now, what about the non-GAAP story when you adjust for those items?
Right, so excluding the litigation provision, those equity losses, amortization, and the related tax impacts. Non-GAAP net income looks quite different. It was $5.4 billion,
And the growth rate there.
up 6% year over year. So positive growth on an adjusted basis.
And non-GAAP EPS.
That was $2.76 per share, which is up 10% year over year.
10% EPS growth, that's more in line with the revenue story.
Exactly. And if you look at it on that constant dollar basis again, the difference is even clearer. GAAP EPS growth was around 3%, but non-GAAP EPS growth was about 11%.
Wow. So that litigation charge really masks some underlying strength in the standard reporting.
It definitely had a major impact on the reported GAAP figures for this quarter, yeah.
Okay, let's circle back to those key business drivers you mentioned earlier. What were the growth rates there? Constant dollar.
Sure. So payments volume for the 3 months ending March 31st, that was up 8%.
8%.
Although, interestingly, the volume from the previous quarter ending Decade 31st, which, remember, drives Q2 service revenue that grew 9%.
Okay, slight difference there. And cross-border.
Strong. Cross-border volume, excluding intra-Europe transactions, was up 13%.
13%.
And total cross-border volume, including intra-Europe, also up 13%.
Yeah.
Solid international activity.
Good to see. And the number of transactions.
Processed transactions were up 9%. That totaled 60.7 billion transactions for the quarter.
60.7 billion. That's just a massive number.
It really is. Shows the scale of their network. So overall, those core metrics, they look pretty healthy.
Definitely seems like the fundamental business is chugging along. So what are they expecting for the near future? What's the guidance look like?
Okay, looking ahead. For the fiscal third quarter, Q3 25, they're guiding for low double-digit net revenue growth.
Low double digits, okay?
That's on an adjusted constant dollar basis, mind you. They also expect operating expenses to grow in the low double digits.
Matching revenue growth,
That's
roughly.
Seems like it. And the interesting part for investors, diluted EPS growth, they're forecasting high teens.
High teens for Q3 EPS growth. Wow, that's quite optimistic.
It is. Definitely signals confidence for the next quarter, at least on that adjusted basis.
What about the full year, fiscal 2025 overall?
For the full year, again, adjusted constant dollar, they expect net revenue growth also in the low double digits.
Consistent with the Q3 outlook there.
Yes. Operating expense growth for the full year is expected to be in the high single-digit to low double-digit range. So maybe slightly better leverage potentially over the full year compared to just Q3.
Okay, and full year EPS?
Full year diluted EPS growth is projected in the low teens.
Low teens for the year, after guiding high teens for Q3. Okay, so still strong, but maybe moderating slightly later in the year compared to Q3's forecast.
That seems to be the implication, yes. And of course, for you listening, the question is always, how does this guidance stack up against your own view of the economy and Visa's position?
Absolutely. It's just guidance, not guaranteed. Were there any other notable items from the report? Share buybacks, dividends, that sort of thing?
Oh, yeah, definitely. They were active on the capital return front. In Q2, they bought back $4.5 billion worth of their Class A stock.
$4.5 billion in one quarter.
Yep, at an average cost of about $340 per share. They also declared their quarterly dividend, $1.59 per share, payable in early June.
Standard dividend payout.
Seems so. And importantly, the board authorized a new share repurchase program. A big one, $30 billion, multi-year.
$30 billion. That's a huge authorization. Signals a strong commitment to buybacks continuing.
Absolutely. It's a significant signal. They also mentioned depositing $375 million into that litigation escrow account, which, interestingly, they note, has the same economic effect on EPS as a share repurchase.
Okay. And their cash position.
Pretty solid. They ended the quarter with $15.2 billion in cash equivalents, and investment securities. Gives them plenty of flexibility.
Okay, so wrapping things up then, it sounds like Visa's Q2 showed, well, pretty solid underlying performance, especially on the revenue side.
Yeah, the core business drivers, volume, transactions, cross-border, they all look quite healthy.
But that GAAP net income took a hit because of that big litigation charge.
Exactly. The non-GAAP figures paint a, let's say, clearer picture of the ongoing operational profitability, which showed decent growth.
And they're actively returning cash to shareholders through buybacks with a big new authorization and dividends. Plus, the forward guidance, particularly for Q3 EPS, looks quite strong.
Agreed. It highlights the resilience of their model, even with that one-off charge. The outlook suggests they see continued momentum.
Of course, we always have to add the caveat. Forward-looking statements aren't guarantees. They involve risks and uncertainties, which Visa details in their SEC filings.
Crucial point. Anyone wanting the full picture should definitely check out the official earnings release and presentation on Visa's investor relations site.
Right. So this deep dive was really about giving you those key highlights. As you digest this, think about what stands out to you. Was it the revenue growth, the litigation impact,
Yeah.
the buyback program?
And what questions does this raise for your own investment decisions? It's really just the starting point for understanding where Visa might be heading.